What's going on, guys? Quick little Monday update. Very boring day today for AMC and GameStop. SPY, another new 52-week high. Looks very good. Still expecting a pullback. Just going to jump right into it. Going to try not to drag this out too much. So here's the macro on SPY once again. Descending broadening wedge for a year. Breakout, retest, reclaim the ascending triangle. Break the ascending triangle to the upside. Upside to 444. Pull back to the 20 EMA. And then more upside. And then another new 52-week high once again today on SPY. 451.93 I believe was the high, almost touching 452 today. 75 days in a row closing over the 200 EMA, golden cross on the daily, all of which is very bullish. Again, touching on SPY daily because the previous two times the meme basket squeezed, January and June, SPY was rallying to the upside the exact same way that we're seeing here. SPY broke both of its macro patterns, the descending broadening wedge and the ascending triangle, to the upside. Hasn't seen the 200 EMA in over 2 months. Golden cross on the daily. This range we're trading at right now have not seen since April 2022, over a year ago. And from October 2022 until present day, forming higher highs and higher lows to the upside. Looks very bullish. Very, very bullish on SPY. I'm not going to go over the symmetry today. There's no need to touch on the symmetry every single day on SPY. But the symmetry here on SPY, it's labeled. I've covered this multiple times. It's identical. Perfect symmetry here, perfect touch points on both sides, and the equivalent of where we would be now is just having broke out of this green circle here, getting this upside, and I'm still expecting this pullback here to come back to the top of the range. So if you remember me saying when we broke this range here and hit 450, I said you could possibly expect a few more dollars of upside, possibly 452 to 453. Before you find your top, and then you pull back to the top of the previous range here at 444. So I'm still looking for that, and that's pretty much it for SPY. Really quick, the micro. So again, here would be the two green circles, the move to 450 over a year ago, and the current cycle. And the equivalent of the breakout here would have been right here, and still I'm looking for this pullback here. Potentially see that middle of the week. I'm expecting a pullback to the top of this range here at 444. At least close this gap here at 446. But I am expecting to pull back to 444 here in the relatively near future. Potentially Wednesday. You might see another sideways day today. Tomorrow on SPY up in this range up here. Potentially one more sideways day before you find the pullback to the top of this range. From there, we should find a bounce higher. And at this point here, it's possible the symmetry breaks. We'll have to just take that day by day. So that's pretty much it for SPY. AMC's macro. So you have a descending trend line 2017 until you squeeze January 2021. Comparable to the descending trend line we have here from the breakdown in the flag from the June highs. Once again, macro fractal break here, this gap down, followed by a W, a sideways W pattern, and over here the exact same thing, macro fractal break right here, followed by this sideways W pattern before you break down into the downtrend. Again, just laddering down here for the most of it. The green more or less being a W on both sides, the red, the cup on both sides, and the blue come down, bounce up, come all the way down to the bottom, curl up towards the end. Same thing over here, come down, bounce up, come all the way down to the bottom, curl up towards the end, before dropping to the flat portion here, where you have 1, 2, 3 touches on the bottom, 1, 2, 3 touches on the bottom. From that third bottom, you find an uptrend, which breaks you out of the triangle, and from there, you squeeze. So that's what we're looking for. Again, the other perspective that I always show with lines, again, macro fractal break, the W, macro fractal break, the W, 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 takes you to the end of the blue here, and then from that 6 point there you drop down to the flat portion where you have 1, 2, 3 touches on the bottom, and from that third touch you form an uptrend, break the triangle and squeeze, and then from the 6 point drop to the flat portion here, 1, 2, and now 3 touches on the bottom, and in the uptrend that will be breaking us out of this triangle and taking us to our squeeze. So this looks very good. Again, this final iteration here, we're curling to the upside. Very clearly curling here. You can see the curvature, completely flatlined here, completely bottomed out, and we just got our third bottom. So now looking for the break out of the triangle, we really don't have to go too far. As far as price targets go for the breakout, the macro breakout would be somewhere around $5. The macro fractal break, which would be this gap up right here to the top of the tri-peak, would be roughly $6, and the squeeze theoretically would be kicking off from $6, a straight line from there. So that is that. Again, we're going to be jumping into the micro now. So with the micro, we're just looking at the flat portions on both sides. the orange, purple, and blue, comparably to the orange, purple, and blue, the flat portions with the 3 bottoms. Zooming in on that on the micro now. Once again, this is an area chart, so both orange boxes is where you find your first bottom. You come down to the bottom and have this chop here. Same over here, come down to the bottom, have this chop. 3 peaks and increasing height from there. Exact same thing over here. The purple being more or less a cup with a higher high on the right. And same thing over here, more or less a cup with a higher high on the right. The blue is the W with the tri-peak, where you come down, break below that horizontal line I've spoke about multiple times, bounce above it, and then from there you get your second bottom. And over here, the exact same thing, breaking below the horizontal line, bouncing above it, and then getting your second bottom. And then from there you get the tri-peak, which is the middle of the move. Tri-peak is the middle of the move, and then from the third peak of the tri-peak, come down one last time to your third bottom. Same over here, and then from that point you form an uptrend which breaks you out of the triangle and a straight line into your squeeze. Once again, we're tracking this faster from the start of this until your third bottom in the January 2021 cycle, 320 days roughly. In the current cycle, from the start of it to our third bottom, 204 days. So tracking the flat portion here roughly 3 months faster than the way it played out January 2021. And with that, from your third bottom in January 2021 until your peak was 22 days. So again, we're tracking this faster, and things will be getting parabolic very, very soon here. And it's going to be fast and out of nowhere. So that is that. The RSI again is the same. I'm not going over this. Pause the video if you have to. Looking at both flat portions, January 2021 cycle here, the squeeze in January, comparably to the flat portion of our current cycle, and the RSI is underneath, and it's all color coded. I'm not going through it, but the RSI is perfect, and we would be in this iteration here from your third bottom. You pop up here and you get this pullback before you get this gap up here, and this gap would be your breakout. So we would be in this green circle here on the RSI. It matches very nicely, and we would be in this green circle here again, looking for this gap up iteration that will be breaking us out of the triangle. So that's where we are now. I'm not going over the RSI. Pause and look at it if you have to. The gaps on the daily, once again, flat portions of both cycles here. Daily chart, all the gaps are labeled and they're in the exact same spots. There's more candles over here again because we're tracking this faster. It's playing out faster in the current cycle, but all the gaps are labeled and they're in the exact same spots on both sides. All the rectangles are color coded. Gaps are marked by the flags, and they're in the exact same spots on both sides. Now we are looking for, having just came down to our third bottom now, and this final gap here, this red flag, which would have been comparable to this, and then coming down to your third bottom. And then from there you form this uptrend here, which would be where we are now. We are looking for this blue flag here, this gap up that you see right here, which would be our breakout iteration. That's what we're looking for now. It's taking a while. I'll get into the tracking and what it's looking like, but this is what we're looking for next, this gap up here. This gap up that we see here, and it would be taking us roughly to the $5 range. Once you see that, it's on, you know. To also confirm this would be the daily EMAs. So again, both flat portions of each cycle, and this is again the daily chart and the EMAs. So the 20 EMA being in black, the 50 EMA being in red. The EMAs are identical. The 100 and 200 EMA are the same too. I just don't have them on here because it gets very cluttered. But 20 EMA starting under the 50 for the whole time. You break above it, come underneath, and break above it higher. You get this wave move, which takes you to the end of the purple, more or less, in the January 2021 cycle. Comparably to the current cycle, you have the same exact thing. You get this wave move, breaking higher at the end of the purple. From there, you break back below the 50 on both sides, hovering under the 50 before you break over it in the tri-peak, as we do here. And then from there, you come back underneath again, which is where we are now. And again, the EMAs are also confirming where we would be on the macro. Same thing here. You're fighting for the 20 EMA here from the third bottom in the January 2021 cycle, where you pop up, you reject the 20 multiple times here before gapping over the 20 and to the 50. So, and again, your final cross here of the 20 over the 50 was in the tri-peak, same as here, before coming underneath, and now we would be fighting for the 20 EMA. Once this finishes playing out, we should gap up over the 20 EMA and to the 50. And again, that would be roughly $5. That would be our breakout iteration. That's what we're looking for now. Again, looking for this gap up right here. So that is that. And now Touching on this again, the breakout that we have here, we had this macro downtrend, multiple rejections, 1, 2, 3, 4, maybe you can call that a rejection there, 5, get that lower low that we got, and then we broke out, retested, and now we're just sitting right above the resistance, now acting as support. So this looks very good. I'm trying to just fly through this video. Not really much happened today, so nothing changed. Again, this is the final iteration of AMC from August here when APE was dropped. This is about the previous year of price action on AMC is what we're looking at here. And again, you could see the curvature here curling very clearly to the upside. And on the daily, all three of our bottoms, 1, 2, and 3, were forming higher lows. So we have the support down here, and we have this resistance up top, and support is meeting resistance very soon. This range here is roughly 404 to 470. So, you know, the price action that we're seeing for the meantime is going to be relatively flat. The macro support resistance of AMC right now is $4.04 to 470. Anything over 470, I mean, if we get over 470, more likely it would be that gap up we're looking for, and that would be our breakout, which would, from there, we would be looking for the macro fractal break, which would be the gap to $6 here. So the support and resistance of AMC's macro is pinching down very tight now. So again, the price action in this range is going to be very sideways until it's not, until we gap up to the next range, the $5 range, which again would be our breakout. This gap here that we're looking for, once again, from your third bottom, you get this uptrend, you get the pullback, third bottom, get the uptrend and the pullback here. We're looking for this gap here, this blue flag. This would be our $5 gap and our breakout. So that's what we're looking for. Again, the move is symmetrical. The move that played out prior to the squeeze in January 2021 is a very symmetrical move. It's perfectly symmetrical. It's a W with a tri-peak in the middle, and the tri-peak would be the middle of the move once again. So you have your left leg of the W, you have your right leg of the W right here. You pop up, come down and up, and then the rest of the way up. And then here you pop up, come down and up, and the rest of the way up, which is where we are now. Your second and third bottom on the bottom of the flat portion, comparably to the current cycle right here. So your second and third bottom, again, it's a W, you pop up, come down to your second bottom, same as over here, pop up, come down to your second bottom. You get into the tri-peak, which is the middle of the move. So the tri-peak would be the middle of the W. And then from the third peak, you come down to your third bottom, your third and final bottom. And then again, you pop up, come down and up. So we're looking for this gap here, which would be the symmetrical equivalent of this move here, which would play out over here. Again, this is more or less a star bottom here. We're looking for this gap right here. Again, just being very redundant. We're going to be relatively sideways in this range until we find this gap here to $5. At that point, the 20 EMA will cross the 50 on the daily, as I mentioned multiple times. The next time the 20 EMA crosses the 50 EMA on the daily to the upside, we will be squeezing or in the middle of our squeeze. So that's what we're looking for. And as far as symmetry goes, having come down to our third bottom now, which matches very nicely to this bottom here, the symmetrical equivalent would be a straight line, which would finish up the W with the tri-peak in the middle, exactly the way it played out in January 2021 leading up to the squeeze. So again, looking for this gap here to the $5 range, that would be our breakout. And then these two gap candles here is your macro fractal break, which takes you to the top of the tri-peak. So the first gap would be $5 roughly. Play out this iteration here, which just so everyone knows, this iteration will play out very similarly to what we're seeing here as it did back here. If you zoom in on the micro, it's pretty much the same movement. It's just your first iteration here, you gap up, and then you play out the exact same thing again. More than likely, this will play out faster. When we gap up here, it'll play out faster than this, but that's what we're looking for. And then the gap higher than that to the top of the tri-peak, which would be roughly $6, would be our macro fractal break, and then from there, a straight line into our squeeze. So that looks very good. Once again, touching on the current range that we're trading in. So here would be our third bottom, the 7 wicks that we got on the 1 hour chart to 401. You get the pop off, and now we're battling for this resistance at 450. So you get the first pop off, break above 450, reject it, come down, bounce off of the previous range as support. You have chop here, consolidation in the middle of the range. This green square here would be the middle of the range. You pop above resistance again, reject it again. Double bottom here at the top of the previous range as support, bounce up, reject the middle of the range. That's when we found that lower low. Nasty bounce off that 389 low that we saw pre-market. Nasty bounce off that, reclaim the range. You get this uptrend back up to the top, reject 450 again, try again, reject it again, and then came down on Friday, bounced off the middle of the range here. Early on today, came down, broke below the middle of the range, and reclaimed it. So we're just chopping here. I would not be surprised in the slightest to see chop the rest of the week in this range. And more than likely, it would just be forming higher highs and higher lows all week until we close the week somewhere around 450, closing above this yellow line up here, this resistance. And that would play out as a symmetrical move as well, where this W here would be the middle of the move. And then from there you drop down, you get this chop in the middle of the range, and you drop down and get this chop in the middle of the range before we get the gap up that we're looking for. It's more or less playing out as an inverse head and shoulders. Here would be your head, and here would be your two shoulders. The right shoulder is now forming. So this looks very good. Once again, AMC and GameStop are the exact same stock. So this is an overlay of GME over AMC. GME is in the orange, and the AMC is candles. So you have your January squeeze on AMC and GameStop here. You come all the way back down. You get the pop off here, would be the equivalent to this. You form a cup. You form a cup and get your June squeeze. And then just following the orange line here matches perfectly with AMC, tracking perfectly together all the way through. And then this would be GameStop's flat portion versus AMC's. Again, GameStop, same story for GameStop. The final iteration of GME here, you're curling to the upside, and AMC the exact same thing, curling to the upside. While I'm here, this final iteration of GME is playing out very symmetrically, where the W would be the middle of the move. You have your left shelf here, more or less a shelf, and the right shelf here, and the symmetrical equivalent of this would be a straight line, this straight line here that we're looking for. Again, the W is the middle. You get your left shelf, you get your right shelf, and then we're looking for the straight line, which will be taking us to our squeeze. Again, more likely than not, this upcoming squeeze on AMC and GameStop, the rest of the meme basket will be MOAS. So that's what we're looking for. And same story with AMC, where this would be your W here, the middle of the move. You get your left shelf over here, you get the right shelf over here, and looking for the straight line. So AMC and GameStop are the exact same stock. They're going to be squeezing at the exact same time, and more likely than not, it will be the MOAS. One other thing I wanted to mention while I'm already talking about this, and here's GameStop, a 4-hour chart. Again, the W here being the middle of the move, your left shelf, your right shelf, and then the straight line here would be the symmetrical equivalent that we're looking for, and that straight line will be taking us into the squeeze. So GameStop support and resistance is pinching down here. I previously mentioned that, where can I show this? AMC's support and resistance right now is pinching down very tight. So 404 to 470 roughly, 70-cent range more or less is AMC's macro support resistance. I'm not talking about a micro breakout. I'm talking about a macro breakout. The support resistance on AMC, the range is 70 cents and getting lower and lower every day. As support is coming higher and resistance is coming lower, it's being pinched down a few cents lower and lower every day. And with GameStop, it's the exact same story. So GameStop has this uptrend here and this upper resistance, and support and resistance is pinching, and support meets resistance for GameStop next Tuesday. So I would not be shocked at all to see GameStop relatively sideways in this range for the rest of the week. And at the same exact time, AMC would be relatively sideways in this range for the rest of the week before gapping up potentially next week. I'm not saying a move to the next range higher is off the table this week. I just would not be surprised if AMC and GameStop were relatively flat for the rest of the week. And then next week, we see the gap ups, and that gap on AMC and GME will likely be on the exact same day. So that's what we're looking for. So yeah, GameStop, same story. Support's meeting resistance very soon. Next Tuesday here, support meets resistance. The range is roughly $23.70 to $22, so $1.70 is the range on GameStop. This will be breaking to the upside, and that will be kicking off the squeeze more than likely for GameStop. AMC is the exact same story. Once we break this, we like I just mentioned multiple times previously, we're looking for this gap up here. This gap up is your breakout iteration, and then from there you get the macro fractal break and then your squeeze. So AMC and GameStop are the exact same story, And the tracking on AMC I can go over really quickly before I end the video here. This was the January 2021 cycle on the left, your third bottom here, your third and final bottom marked by the green arrow, and the current cycle on the right, your third and final bottom marked by the green arrow here. So off of the third bottom, you get this pop in green, the green circle. From there, you come down to support on both sides. You get another pop in the yellow, not as high, come back to support again, and then you get this very slow, choppy uptrend on both sides. You get the pop in the orange box now, same over here, come down to support again on both sides, pop even higher, the blue circle here. I have this white line under to help you follow the movement. It's pretty much the same on both sides. This red rectangle will be the equivalent of this. From there, you come down, break below the channel here, as we did. You reclaim the channel, and then at the end of the channel, you break below it again, as we did last Friday, and then today, relatively flat. This break below the channel is actually a wick and then closes above the channel on Friday, and then you get the gap up. I would not be shocked at all, as I previously mentioned, to be relatively flat all week, forming a very slight uptrend here before closing the week somewhere around the top of the range here at 450, reclaiming the trend and then potentially gapping up next week, and that gap would align with GameStop as well. Again, GameStop's support is meeting resistance here next Tuesday. So that's pretty much it for the video. Relatively sideways day, very boring for AMC and GameStop. SPY, another new 52-week high. Not surprised at all there, but I am expecting a pullback to 444 in the relatively near future. And as far as AMC and GME go for the rest of the week, I wouldn't be shocked at all to see very sideways, boring price action before both break to the upside next week. Not saying that we can't break to the upside this week. What I am saying is that, just looking at GameStop support and resistance, GameStop and AMC are the same exact chart, same exact stock, and with that being said, you can use GameStop to track AMC, and you could use AMC to track GME, vice versa. So with looking at GameStop, support is meeting resistance next Tuesday. Wouldn't be shocked at all if we're sideways here for the rest of the week, and then we see the breakout next week. And that would go the same for AMC, chopping in the middle of the range here, potentially for the rest of the week, maybe forming higher highs and higher lows, closing above the resistance here at 450, and then seeing the gap up next week. I'm not saying we can't see the upside this week, but I would not be shocked to see relatively sideways price action. Again, the macro support and resistance on AMC is roughly a 70-cent range. So the price action until we get that gap up is going to be relatively boring, and the same goes for GME as well. So that is pretty much it for the video. I will catch you guys tomorrow with another update, and that is it. Catch you tomorrow.